Russia and Ukraine are large producers and exporters of key food commodities, minerals and energy. Today, they account for about 30% of global wheat exports, 20% of corn, mineral fertilizers and natural gas exports, and 11% of oil exports. Mr. Speaker, so naturally this war has created sizable global economic and financial shocks, particularly in commodity markets, with the prices of oil, gas and wheat recently soaring. For fuel especially, the conflict has exacerbated the mismatch between global demand and supply, pushing crude oil prices above US $100 a barrel in March, levels not seen actually since 2008. Economies reliant on oil imports like ours will see wider fiscal and trade deficits and inflationary pressures because of the conflict. Though some exporters, such as those in the Middle East and in Africa and places like Nigeria, may temporarily benefit from higher prices. This elevated inflation, Mr. Speaker, sir, along with the lack of fiscal space, has prompted many countries to tighten their fiscal and monetary policies, posing further challenges to the economic recovery. If these shocks are sustained over the short term, the OECD, Organization for Economic Cooperation and Development, expects global GDP growth to reduce by 1 percentage point and inflation to rise by a further 2.5 percentage points. Mr. Speaker, sir, the Ukraine-Russia war has delivered a severe and unfortunate blow to the global economy that will hinder growth and raise prices just as we are starting to bounce back from the pandemic-induced recession. Mr. Speaker, sir, global trade disruptions and inflationary pressure are likely to intensify as the conflict drags on. Fiji is already beginning to experience the spillover effects of these trade shocks, with imported inflation pushing up domestic fuel and food prices in recent months. Fiji is particularly susceptible to fuel price shocks, given that fuel accounts for roughly 1/3 of our total import bill.